What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button. If you're brand new, if you're coming back, hit the thumbs up button. Welcome to all the YouTube viewers and podcast listeners and other people. I appreciate you joining me today. Happy Thursday. We're talking about cryptocurrency as it relates to the greatest financial revolution of our lifetimes. Now, today we're talking a little bit about Bitcoin's ongoing march towards the critical moment of potentially crossing this trend line and hitting some major support or resistance levels, I should say. Talking briefly about what's going on with some of the other macro issues as I dig into the bigger macro picture, specifically into the other currency markets, referred to often as Forex. You start to see a lot about how crypto is related, how it's grouped as an asset, and then even bigger picture in the global macro scale, how cryptocurrency feeds into that. And I think it's just an important conversation to keep coming back to at least once a week, and then we can drill into things like the S&P 500. Sometimes you can get tangible information from that, but more importantly, it shows the connections. Most of this video, I think, is going to be about news articles coming out, but you're really starting to see clear indicators, macro indicators, in my opinion, that are going to point to, they give very good signals as to what could happen next for people in our shoes, retail investors that come in here. You open up an account on Coinbase or Gemini or whatever, you buy a couple $100 worth of crypto, and you just want to make good decisions. That's what this is all about. Again, this is not professional advice. As always, got to say that. Let's dive in. Bitcoin has had yet another great day. Now, again, I'm going to drill in here for anybody listening on the podcast. Clean chart, really nothing on this. I'm looking at Bitfinex, Bitcoin against the dollar. And you're seeing a lot of this. You saw in the thumbnail yesterday, the Bart Simpson. That's kind of what you call these sort of ridiculous patterns, upside down Bart Simpson. And we're just seeing this ongoing kind of overall trend. Now, if you don't do any technical analysis at all, that's totally fine. You can start to see how these trends start to play out. Now I'm going to open up the volume, which you can kind of see here, especially if you zoom in. It hasn't been that impressive, to be perfectly honest. And I think the low volume is a big reason why this low liquidity situation can create these pumps. My personal theory is that it's just people that are stressing the market. They're seeing what sort of reaction they can get with different situations. So if they buy 20 million, what happens? If they sell 20 million, what happens? So that they can see like the overall market strength and structure, and also potentially shake out some people. But you're starting to see, you can see this kind of uptrend here. I'm not going to get into the drawing or anything, but we are headed straight at this trend line, which coincides with this area right here, which is basically, let's call it 8,600 to 9,000, give or take, this whole block, which coincides with this trend line. That's the area to watch. We get through that, and then it comes back, bounces off again like a support. So let me draw a very quick rectangle for you for anybody who is watching. Let's do like this. So let's say this was the resistance box. If we go through, if we can make it all the way through here, and then it comes back, and then it can still bounce off and then go up, that's the sign, right? If it corresponds with this downward trend line, that's probably how it may, end up working out, where it comes down and bounces off somewhere in here. But we need it to not only break through, but to retest it. If you get that, remember we talked about probabilities. The probability gets much more likely that the bull trend will continue in the medium term. So that's what we're watching for. I would say I'm excited. I'm also being pretty conservative at this point, where, like we talked about earlier in the week, been buying slowly into some altcoins, but by no means am I getting really aggressive on anything in terms of deploying capital. Even with dollar cost averaging, I'm staying pretty conservative on that sense, just putting in a little bit here and there. because I want stronger signals. I personally am willing to give up some of the potential gains in order to get higher probabilities. That just tends to suit my personality at this point. So if you want to do the higher risk, higher reward, I mean, proof is in the pudding. Check out CoinMarketCap. I mean, it's there, but it is higher risk. So as we get higher, as we break through here, the probability gets much better, but your potential returns may go down a little bit. So it's really up to you and how you want to play that. So we're seeing that it's really the same story across Litecoin and Ethereum. So we're just going to look at this. We're just looking at Bitcoin for now. All right. Now, one interesting thing I saw, especially as I dig into, one thing I do, I would say 2 to 3 hours a day, is I'm really fascinated with learning about other markets from a trading perspective. Now, most of what I do is in demo accounts, right? Even with crypto, right? You get like a demo account on BitMEX where you can trade. Doesn't matter if you're in the US or not. You go get an account on the demo, coinmastery.com/BitMEX. You can get a demo account and you can trade with virtual money. And you can learn how to do this stuff, but you don't actually have to put any money out. So I'm learning about things like Forex, like futures, even equities, trading on equities, not really options. It's not quite my jam, but it's really helping me understand how this all connects even better. And today with the US, they released a little bit of some information about the 10-year yield out of the treasury bonds. If you don't know what that means, it's okay. It just means the dollar got stronger. And the reason why this matters is because from a macro standpoint, from a lot of these investors who deal in macro, this makes a big deal against other currencies. It also has an impact on our own economy, right? On the strength of our own currency for Americans at least. And it impacts everybody really worldwide. But what we don't know is, will things like the US dollar impact Bitcoin? What a lot of people don't realize is that something about like a trading mentality is holding, Bitcoin has one set of risk rewards, and then the idea of going to fiat, in this case US dollars or even euros or Australian dollars, wherever you are, fiat currency is often seen as kind of a stable coin. But what you don't realize is the dollar is a moving, living creature, just like everything else. In fact, it's been a terrible investment in the United States, at least, over the long term, through inflation, things like that. And so you're constantly, once you really get into that trade mentality, nothing is like fully stable. There's no like fully secure thing. That's why index funds can do be so freeing of the mind. But as we watch things like the dollar strengthen, does that have an impact on Bitcoin from a macro standpoint? I don't think it does yet, because I don't think Bitcoin's big enough. But if Bitcoin really is truly a store of value, which hopefully can hedge against something like inflation, it's essentially what gold is doing, and you're seeing a lot of action with gold and silver right now, this is going to become a bigger and bigger story. So what I mean by this is, over the course of this year, you're going to see more and more big money come in, and they'll be looking at things like the dollar strength. They'll be looking at the Forex markets. They'll be looking at the equities markets as a way to gauge the price of Bitcoin. We look at this on a very micro level right now, right? How many people are signing up for Coinbase? How many people are buying, how many institutional investors are coming in, blah, blah, blah. The next level is going to be macro. And this is where I think I personally always want to be way ahead of the curve in terms of seeing these trends, so I can place very small bets that end up having huge returns. And these are the kind of things, at least from an intellectual standpoint, that can help, that can then turn into actionable intel. All right, so we'll keep that in mind. I'm not going to harp on that. This is obviously not a macro trading show by any means, but it is helpful even if you're a long-term holder. I think just being able to read the news and translate it into decisions, informed decisions, that is always helpful. So let's refresh my Brave browser. If you guys don't have Brave, you should go check it out. Coinmastery.com/Brave. We're just chilling stuff today. It's great. But you should, because It's a really good way to support the blockchain. So we flip it over, and you can see this has been the story of the week, where things are up 50 to 100% on the week. Not across the board, but you're definitely seeing some. I don't really like to look at US dollars, so I switch over to Bitcoin. But even still, we are seeing some good movement. Bitcoin Cash somehow is moving. But I think that also shows there's an interesting story with Bitcoin Cash in the sense that I would say last week, it was basically considered dead by a lot of people. It was like, this is never going to work again. It's gone. It's over. And then all of a sudden, it starts to go big. And so that, I think, is a very good lesson to remember, is when people say, especially when it's in the top 20, when they're like, oh, this one's done, there's no way it's coming back. That's typically the best time to buy. It's very counterintuitive. Right? Rereading a great book, Trading in the Zone. If you guys haven't read that, you should check it out, which talks a lot about that. I think that the big story that I've seen is what we've been talking about. And I'm not going to beat a horse to death, because I think we can talk about it from a macro standpoint. Probably the bigger thing to take away is the timing, more so than the actual coins that are being bought. So instead of going through all the coins, and we talked about a few yesterday, we talked about BAT token or Brave token, Wax, Salt, things like that. Instead of talking about the actual tokens, I think it's important to talk about the timing, meaning whatever it is you buy, realize that we are in a temporal strait here. It's kind of wishy-washy on where this is going to end up. So no matter what you buy, make sure you have a plan behind it, and then determine which coin to buy. That's the much better strategy, as opposed to just blindly throwing money, hoping for gains, and not having a plan on when you get out. If you get out, what do you do? So I think that's really the story. Again, Bitcoin dominance continues to go down. We're up to 354 market cap. Bitcoin dominance is dropping. To me, it's a very clear correlation, right? Altcoins are getting the money coming out of Bitcoin, which was potentially a flight to safety, relatively speaking. Market cap's going up. This is not a true $20 billion increasing. The big question I have is, at what point does this alt season, if you want to call it that, run out of cash from the people that are still in the game? So right now, if I had to guess, and this is based loosely off the data, loosely off of market sentiment, loosely off of researching things like Coinbase downloads, by looking at all the web traffic for all the exchanges, I have a pretty good idea of Google Trends, things like that, of how much of it new money, how much of it is institutional money, and how much of it is retail money that's just been sitting on the sidelines. That's, I would say, a majority of people listening or watching this right now. At some point, that's going to run out. The obvious answer would be that it would probably peak around what the previous market cap high was, which was 750, 800 billion. I would argue that it's probably even lower than that, because many people got shaken out. So if we scroll out here, market cap may be closer to somewhere in this area between 11,500 and 14,000, somewhere, whatever the market cap would be in there. So let's call it 500,000, 600,000. At that point, all of us have kind of committed as much as we're willing to commit. Where's the next round of money coming in? Because that is what will slow the growth of this. I don't know. Maybe it becomes a self-fulfilling prophecy again. We'll see what happens. But that's the lingering question. I don't think there's a strong enough case for me, at least, to not do anything. I'm still going to buy in slowly into some of these altcoins, into Bitcoin. Very, very conscious of where we are timing-wise. But I do think that it's important to keep that in mind, keep that question at forefront. Now, let's talk about some cooler, in my opinion, like stuff that's happening in the greater market. Now, first thing to know, and this is true with all news, okay? News in itself is a questionable world these days in terms of what I like to call the post-truth world, where we are beyond what is true and what is not true in many ways. So I think that what we read on news is you always got to take it with a grain of salt. That being said, there's also different kinds of news. And I think that looking through these sites, it can give you a very basic idea that you can then draw connections from. So for example, this article, major investors met with SEC to discuss crypto exemptions. What this is saying is that Andreessen Horowitz and Union Square Ventures, those are two of the biggest private venture capital companies in San Francisco, Silicon Valley area. They essentially lobbied the SEC on March 28th. What they said is that tokens should not be securities, but you should definitely go after people who are doing fraud. Obviously, fraud-related tokens are, but don't touch all the other tokens from a regulatory standpoint because it's going to stifle innovation. That's you'd expect that from a venture capital firm, especially a venture capital firm that has deep investments in many of these tokens. So this is really, I think it's no surprise, but it's good to see this sort of thing happening, that they are lobbying, that there's a lot of money behind it trying to lobby it, especially companies that have very deep pockets and they also have very deep connections into much bigger publicly traded companies, so Facebook, Google, all the big tech companies. But the real story is when you start connecting the dots. Okay, so these guys on the 28th went and met with them, and this was only reported today, which is 2 or 3 weeks later. Then you start to say, okay, well, obviously they had been planning that way before anything had really happened. So you look back and who could have been making moves knowing that they're going to lobby it and really no decisions have been made yet. And so you start to look, this is just one example. You go on something like the Coinbase blog and you look at the timeline and you look at something like, okay, March 26th, 2 days before the actual meeting happened. Now I'm sure the planning of this meeting was well in advance. But March 26th, Coinbase writes a blog post, we are going to add ERC20 support for tokens, to Coinbase. Those are the tokens. That's the same thing. That's a vast majority of what these guys are lobbying about, right? These venture capital companies have a huge incentive for ERC20 tokens to be easily proliferated, not be regulated nearly as badly as securities or as strictly as securities, so to speak. Coinbase coming out 2 days before with a blog post. Obviously, Coinbase has Digital Currency Group as one of the chief stakeholders. They are very well tied in with regulators, as we know from all of the regulatory compliance that they had to do for GBTC, for the Zcoin Trust, for all the different trust products that they're making over the counter. So there's a lot going on. And so this week, as we look through, zoom in here to the 1 hour, right, over the course of the last couple of weeks, and as we look back to March, we don't necessarily see much price action as it relates to this, but we do see the corporate business action happening. And you can start to get a sense of what's going on here. You can get a sense from the blogs. You can get a sense from things like Twitter. You can get a really good sense by getting on their newsletter lists, by hopefully, meeting some of these people if you ever visit a place like New York or San Francisco. But so much goes on behind the scenes, and we only see the very, very tail end of it because these guys want to make sure that they get the first rights. They want to control their outcomes, and they also want to be they just want to make sure that they are steering the ship as best they can. So keeping an eye on that can help you make better decisions. Okay, how does this tie into the potential future? It removes certain risks for exchanges. It removes certain risks for certain coins. It opens up the floodgates for new exchanges, things like that. And then you can make a decision on what sort of coins you want to buy, right? Similarly, we're starting to see more headlines around B2B use cases of crypto. For example, this headline is UBS-backed blockchain platform completes live trade transactions. This is essentially a private blockchain that acts like a New York Stock Exchange for UBS, but they are testing it internally. We saw this with JP Morgan, which potentially they may have shelved those projects. You see, IBM is really spearheading this across some sort of central bank issue, around the world, different bank integrations. The New York Stock Exchange has been rumored to be using their own blockchain, but there's a lot going on. Get some water here. This is a big deal in the sense that you are going to start to see a trend of B2B use cases of tokens. For a very long time, we've been looking at this and thinking about these as consumer-facing solutions. We kind of talked about this the other day, where as things get siloed, right, into categories, niche markets, which is essentially solutions to problems. Like advertising was one, identity was one, privacy, the whole thing. The other thing you're going to see is the exact same thing that happened to the software business. Now, this is a little further down the road if you look at the internet timeline, but software products, B2B, that whole world is huge. I mean, it is so big. It's way bigger than B2C in many ways, especially on the sales side. But you're going to start to see companies that start to integrate blockchains and or tokens that use it as a B2B, which is business to business for anyone who doesn't know, use case. Meaning that if UBS actually did release a private blockchain, imagine that they just use it with 10 other clients and the customers never even saw the tokens. It was just done within the client, but the tokens may be on a public marketplace, but there's no actual customer utility of it. All right. And this is when it starts to get really interesting from a valuation standpoint, from equity standpoints, from pricing standpoints. And I think that's the really big question mark. But one thing that I would really encourage people to keep their eyes open to, this is something that I'm starting to be approached by companies and starting to realize this myself, is a lot of companies that are B2B focused, that are building tokens for a B2B use case, but the consumers get the access to the tokens, and both from a price standpoint, but really tokens just provide the data because it provides a marketplace for the B2B network that exists. If that sounds like French, what I just said, don't worry about it. Some of you probably, that makes total sense. But it really just means that there's a whole new world of solutions that are coming from blockchains that you could potentially buy coins from, which is going to take right here on CoinMarketCap. Right now it says cryptocurrency is 1,575, give or take. That could easily go up to like 200,000. I mean, it already is probably like closer to 50,000 when you really get into the incubators and you see how many ICOs and companies are truly out there right now building on blockchains. This is just the ones that are listed, hit the volume requirements for CoinMarketCap. The B2B stuff is a big deal. And more importantly, there is so much money in B2B that this can often be a phenomenal investment opportunity. This is probably too early, I think, but I think most people would agree that in this business, it's better to be too early than to be too late and be able to take a small bet on something. So keep your eye open for B2B stuff. You're seeing some companies that are trying to tackle this, right? Like VeChain's kind of trying to do this, Walton Chain to a certain extent, shipping, anything with shipping. I mean, a lot of these are platforms that like kind of cater to the B2B world, but you really want to see, I think the private blockchains is really going to be interesting, especially if those get listed on exchanges that are powered by protocols, and then you can kind of do a derivative hedge off of that if it's built on Ethereum, for example, or Hashgraph or EOS or whatever it may be. So something to keep in mind. I think that that's going to be a very, very big trend. Again, it's kind of funny. I had no idea that this news came out like basically right as we were doing the video yesterday. Dow Jones Media trials blockchain with Brave browser. I believe it's Barron's. You get a free subscription if you use Brave, which is this browser. So go get your Brave browser. Watch this YouTube channel on Brave. Support the ecosystem. It's great. But these are the kind of things, these integrations from a B2C standpoint that really are disruptive and can really help. This knocks down one of the biggest objections that private equity, venture capital, hedge funds, they all have, is that who uses this stuff? What solutions are really, really driving? This is an awesome example. And it's often better to double down on something that's working than to try to make 10 things that might work, try to make one of those work. And that's why I've never really been a huge brave or bat evangelist. But this week, I'm like, man, this is working. This is something that I can actually send to people I know for them to realize that this is a real thing. That this blockchain ecosystem can actually work. And so it's cool because this creates a narrative. It creates a story that somebody can pitch to their boss as why it's a viable investment model. Right? So you meet somebody, a 35-year-old manager or account. Well, I don't even know what you call someone like a 25-person private equity company. I guess account person or vice president. I don't know, whatever. They are responsible for deal sourcing and getting the best investment ideas. This creates a very, very compelling narrative for a way to get exposure to blockchain because it provides a real business use case that is tangible, that people can use, and it's arguably superior than the current solutions. I mean, I would say that this is right on par. So far, it's a little buggy. They're still working out stuff. It's right on par with Safari or potentially even Chrome, for pure browsing standpoint, right? Speed, ad blocking, and payments and all that. So I think that this is a super interesting use case. We'll see how it translates. Obviously, the market loved that news. I don't think there's any surprise because it is such a good narrative for money to come in. This is such a huge objection for people that it takes down. That's why the market responded so well from a pricing standpoint. Last piece. This came out a few days ago. The New York Attorney General released a statement and said that he was going to inquire on all the exchanges, not just U.S. exchanges, really everything. And the exact wording, I pulled it up over here, I believe. Eric Schneiderman, quote, "Cryptocurrencies on the rise. Consumers in New York and across the country have a right to transparency and accountability when they invest their money. Yet too often consumers don't have the basic facts and need to assess the fairness, integrity, security of these trading platforms." This is really what Giancarlo talked about, the CFTC hearings with the SEC. Remember that when it was with Chairman Clayton from the SEC, Giancarlo from the CFTC when they were with the Senate. This was a month and a half ago now, 2 months ago. Who knows? Time really falls apart in crypto. But this is the same idea where they want to allegedly go and preserve the integrity, or audit, or at least spot check the integrity of some of the exchanges, which is really the Achilles heel of crypto in many ways. Without exchanges, a lot would be different about this ecosystem, right? Liquidity is everything. Here's why I think this is a big deal. And I think that this is something that gets lost in translation. And this is kind of similar to the Verge thing. But when you read an article like this, one set of responses that I saw is that people looked at this and they thought, oh, bit license, which if you don't know, New York State has what's called a bit license. If you haven't, go watch on Netflix, Banking on Bitcoin, which is a great documentary on the rise of Bitcoin. And they talk about bit license, New York State, and how they really just regulated the hell out of Bitcoin or cryptocurrency in general. And so they made it very difficult for companies to operate, for exchanges to operate in New York. They have to basically pay to play. They need to buy a bit license in order to do it. Kraken was one of the famous exchanges, the biggest exchanges that picked up and left. I believe they're here now. They're in San Francisco. And San Francisco-based crypto. And so some people read this and they're like, there's no right for the bit license for New York State to come and impose their, bit license regulatory anti-free market stuff on the crypto world. This is BS. That was one side of it. When in reality, if you read the full the statement, especially if you go to there was an official press release, there is I don't think there's any mention of the bit license in there. In fact, all that they talk about is we need to go and inspect the integrity of what's going on with these exchanges. Now, this is the New York State Attorney General. So we got, on the one side, people that see this and they think it's all about bit license and regulation and BS and government trying to shut down crypto. On the other side, you're seeing an attorney general from New York saying we need to go and spot check all these exchanges. And we're not going to really give you a specific reason, but we just need to go check it all out. There's nothing to do with bit license. The reason I'm bringing this up is I personally don't think this is about bit license at all. I think that there is something about New York State that the Attorney General knows that is like going on with these exchanges, and they just need to investigate. For example, Ripple is based in San Francisco. Let's say Ripple was like BitConnect, right? It was some terrible scam, Ponzi scheme. And maybe some of you may think that, whatever. Let's just say it was like a bad thing. And it was based in San Francisco, California. And it was on all these exchanges. The Attorney General for California has jurisdiction to go look at all of those exchanges if it knew that Ripple was a scam that was ripping millions and millions of people off, right? That has nothing to do with the state requirements for crypto or anything. It has to do with like that sort of jurisdictional enforcement. I think that that's what's going on. I have absolutely no idea. I have no proof. This is complete speculation, conspiracy theory. But I would be willing to bet that somebody in New York, somebody's based in New York, I don't know, Gemini's in New York, who knows what, is saying that there's something going on that's affecting the entire crypto world that New York has jurisdiction on and needs to go investigate. Not necessarily regulate, but go spot check the integrity of. We'll see what that is. I mean, I have no idea. It could be a crypto. It could be like some technology. It could be some person. I have no idea. But make sure you don't, check your emotions on things, especially when things that trigger you. If you are particularly susceptible to being anti-regulation, anytime you see a news article or anything about regulation, those are the things you need to really step back and be like, okay, am I being clear about this or am I being emotional about this? And keep your, like, as objective as possible. What does this mean? What could this connect to? What are the plausible stories that got to this press release? What were the meetings that facilitated this press release? Right? All those sort of things can really help you make better decisions and not have knee-jerk reactions about it all. And that's going to help all of us live happier, more profitable lives. All right, guys. In the meantime, we are going to sit back and watch what Bitcoin does, right? All eyes on this. Will it hit it by the end of this week? Well, if we have a few more bull days, potentially. That would be very exciting. If not, potentially early next week, maybe even this weekend if things keep going the way they're going. All right, guys. I hope you have a great day, and I will catch you tomorrow. All right, peace out.